Here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 73. And today we've got a bit of an interesting article to have a look at. But before we dive into that, if you're watching on YouTube, hit the subscribe button and the little bell to get notified when we release these videos so that you can be notified as soon as they come out. Or if you're watching on Facebook and LinkedIn, leave us a comment, hit the like button, and even hit that share button as well so that more people get to see these videos and get some financial literacy information coming from what's happening in the world and the financial markets. So there's been a big event over the last few days. If you've been living under the rock, today we're going to have a look at this headline. Big concern, RBA's warning on Trump vow. So I'm going to click across because obviously, as per normal, the headline changes between the front page and the actual article. But here we are, this particular article, the headline is now, RBA warns Donald Trump's promised China tariffs would have an adverse effect on Australia. So what are we talking about? Well, no surprise here. We are talking about interest rates and inflation. But in particular, the concern that the RBA is talking about is in relation to what the tariff policy may mean for the Chinese market, and in particular, our supplies to the Chinese market. And ultimately, the policy in the US to apply tariffs, significant tariffs, 60% is one number quoted here, but during the campaign there was talks of even higher numbers than that. But the idea or the policy, the reasoning behind the policy is that the American government or future government wants to bring more manufacturing into the US to create US jobs and reduce the demand for overseas products, cheaper products. So they want to bring the price of those cheaper products to be much higher so that the American population don't feel compelled to pay for them because they're now just as expensive or priced at a similar level to what can be achieved by buying in the US or buying an alternative product in the US. And the idea being that that would generate a manufacturing boom in the US where more and more companies would set up manufacturing or product lines in the US, and Americans would just buy American products. Sounds good on paper, unlikely to necessarily work in the way intended, but the fear for the RBA is that if American demand for Chinese products reduces, Chinese demand for Australian product raw materials will reduce, and that will have an impact on our economy. And so there is a whole host of discussion, like I just outlined there, around the potential strategy of the US and what might be the reaction of the Chinese market in particular, and how that will have an effect globally, because this is not just going to impact China, it will impact all economies, including Australia and any other economy who has been exporting products to the US. If it's a product that the US, the future government believes could be manufactured in the US, they are likely or intending, suggesting, maybe going to impose a significant tariff to prevent the import of that product into America so that those products get created in the US. And so the RBA governor is warning that that will have an impact on inflation and therefore our interest rates. Again, any reason to pause or hesitate their potential movements when it comes to interest rates, they're all over it. And this is just another one where it's a potential hiccup when it comes to Australian rates being cut in the near term. So all eyes will be on what they do Here they're saying it might be inflationary in some ways and deflationary in others. So we don't know, but let's just raise the alarm bell so that expectations of a rate cut are muted even further. Then it goes on to talk about how there's I guess a separate issue, and that's how community organisations will be under the pump because of these prices and inflation, and this is just compounding the inflationary issue, and how that's making it difficult for community organisations to buy the essential items that they need to provide their services. So that's a little bit of an aside. And then the third component of this article is talking about how there is angst about the surcharges being applied to the use of cards, so debit cards and all those types of things. So we've covered those issues in the past, but the main thing that I wanted to highlight from this particular article was the fact that there is still a whole host of noise and potential impact from the change in government coming in January next year in the US, and what their policies might be, and what that policy change could mean for the Australian market, but more broadly the Chinese market. As I scroll back to the main part, what it means for the Chinese market and therefore their demand for Australian raw materials, and what impact that will have on our economic growth, our inflation, and therefore ultimately interest rates. So once again, lots and lots of issues in the air around what could happen to our interest rates going forward. And again, this week, the RBA met on Melbourne Cup Day and announced that they were not reducing interest rates. So that does mean that the next time they meet in February is several months away. It will still be too early to know what particular policies the new government in the US will implement, given that won't come into effect until the 20th of January. It will be too soon to know exactly what they're doing, but it'll be interesting to keep an eye on what they do in the US, what impact that has on China and the rest of the world, and therefore the Australian economy, and therefore interest rates, inflation, economic growth, and all of those key metrics that in previous weekly wisdoms we've talked about as the ones to keep an eye on when it comes to understanding how to incorporate what's going on in the broader economy into your daily day-to-day money management and investing strategy. For now, though, I think this is just another piece of the puzzle. It's nice to be aware of it. There's nothing happening at a minimum until the new year and late January at best. And so at this point, nothing to do. It's a continuation of keep investing, keep applying your surplus to growing your assets, so that over the long term, all of this stuff that we're talking about is going to mean very little and have very little impact long term on your strategy and your growth. Sure, interest rates, they're having a very negative impact on cash flows and serviceability and borrowing capacity, and inflationary impact on prices, which is having a very negative impact on the amount of money you've got to invest. But in terms of the financial markets, let's just keep ploughing ahead and tick off month after month that we are just continuing to add to our investments. So that's Weekly Wisdom. What is Weekly Wisdom? Episode number 73. Hopefully that is something that you can put in the memory bank as helpful information. And as I said earlier, to help us grow the channel, make sure you hit the subscribe button if you're listening on YouTube. And if you're listening on any of the other social networks, do us a favor and hit the like and even leave us a thumbs up in the comment section, just so we know that you've seen it, and that also hopefully that will then trigger the algorithm to show these videos to more people, and therefore more people can stay informed and up to date on what's happening in the political world, the financial markets, and generally how to apply that information to your investing and money management decisions. Have a great week. We'll be back again next week for another weekly wisdom, and see you then. Cheers.